All right, good morning again to everyone from Chicago. I realize in Japan it's now almost midnight in Tokyo, so good evening I should be saying to some of you. But today's session is a little special in that it's being recorded, so people will be able to refer to this session later on. And what I want to do today, hey Boyke, what I want to do today is go through a subject that we're going to start a series of webinars on, and that is the use of automated trading systems and in the Forex market. So today we'll begin with an overview, and we'll talk about some of the characteristics of both the Forex market and trading systems. And later on in the series of webinars, we'll get deeper into how exactly to get set up and use some of these software platforms like Metatrader. And I'd like to also take a look at Strategy Runner, which is another innovator in the world of trading systems. So, and you should be able to see the homepage of traderslog.com, which I am the editor, and we'll refer back to this a couple of times in the presentation just to point out a couple of resources that might be useful for you. The article that on which the presentation is based today is down here at the bottom. Here we go. Automated trading systems in the Forex market. So let's get started. As the editor of a website focused on trading and investing, I try to keep track of industry-related trends and the hot topics at the moment. I'll actually click on this so we can follow along here. Notably, the combination of the Forex market and automated trading systems has generated a massive hive of interest online. Just a little bit louder, sure, Robert. I'll try and put that closer to my mouth. Notably, the combination of the Forex market and automated trading systems has generated a massive hive of interest online. In this article, we'll cover the salient characteristics of trading systems in the Forex market. We'll also take a look at platforms offering the development, backtesting, and automation of Forex trading systems. How's the sound there, Robert? Is that a little better now? Okay, I'll keep going. Trading systems have, of course, been around for decades. Many leading traders have long understood the virtues of using mechanical trading systems. As far back as in the early 1980s, Richard Dennis's turtle traders were sticking to a rigid set of rules, a mechanical trading system, the system itself a closely held secret for many years. The use of trading systems has been central to the success of many, if not a majority, of top-performing traders. Oh, thanks. Being told not to make it too loud. Oh, okay, and we've got no video. Let me just correct that. Okay, so that last point was, and many of you will probably be familiar with this, is that a lot of top traders stick with mechanical trading systems, and you'll hear this repeated again and again in the popular trading literature, how important it is to stick to a set of rules. I mentioned Richard Dennis's turtle traders, and I'll make just a quick aside here to point out where you can find a PDF of the original turtle trading rules, and you can find it on this page. Oops. Or more specifically, on this page. There we go. Okay. So that's an example of people who, successful traders who long ago were using a mechanical trading system. Of course, things have changed a lot now. We've got automation, we've got backtesting technology, so we'll move on and talk about that in a second. A trading system. What is a trading system? A trading system is simply a set of specific rules or parameters governing entry and exit points. And we lost the image again. Okay. There we have the page with Turtle Trading Rules, and I just pasted the URL in there too. Okay, so what is a trading system? A trading system is simply a set of specific rules or parameters governing entry and exit points. The technological advances of recent years have opened up a world of opportunity for the individual trader through the use of trading systems. For example, thanks to the internet and the PC, backtesting analysis of a trading system that previously would have taken months or years can now be done within minutes. Further, trading systems can now be fully automated, having the ability to both generate signals and execute trades automatically. Online communities of traders from all over the world discussing and sharing strategies are springing up and thriving. Now let's do a little overview of the foreign exchange market. The foreign exchange market is the largest and most liquid market in the world, with trillions of dollars being traded daily by governments, banks, and large institutions. The volume traded in the foreign exchange market is several times greater than the total cash volume of the stocks and futures markets combined. This highly liquid, highly volatile market only relatively recently became available to the mainstream trading public. Prior to the late 1990s, an investor was normally required to have millions of dollars in order to access the market at all. Again, technological advances and the advent of the internet have finally brought this market into the hands of the retail trader. I'll bring us back to the article now. Okay, so in order to see why trading systems and the foreign exchange market have made such a compelling combination to traders, let's start out by taking a look at their respective advantages. Advantages of trading systems. A rigorously tested trading system gives the trader confidence and a framework for discipline. Trading systems take the emotion out of trading. Unlike a human, an automated trading system will never second-guess itself or be misguided by fear and greed. Automated trading systems free you of the necessity of being in front of the markets at all times. Once an effective system is developed and optimized, it can be left to run independently. Being a 24-hour market, some of the best Forex trading will likely take place in the middle of the night, regardless of your location. For example, if you're a trader in the U.S. trading the cable, GBP USD, you will likely be asleep during the volatile London Open. And we talked about this before for a lot of the guys who have come to my earlier sessions. We talked about the Cowabunga system, trades overnight, and the author of that system actually uses X-Tick to have signals sent to his mobile phone in the form of a text message to alert him when setup takes place, the moving average crossover takes place, if it's at 2 in the morning. And very often it does happen in the middle of the night. So it's a good thing that we do have this technology now. So automated trading systems allow you to capitalize on market movement at all times. An automated system will allow you to focus on optimizing your strategy and money management rules rather than having to constantly watch the market. The use of automated signals and order execution allow you to trade multiple markets simultaneously rather than being glued to the movements of one market. So for example, if you have a trade setup that works on one market, you can test it on multiple markets, and you can trade it on multiple markets through the use of trading systems without having to actually keep an eye on all these different markets at once. Trading systems will increasingly afford faster identification of signals and reaction to them. As you might imagine, a machine will typically beat a human being in the speed of identifying a trading signal, seeing that moving average crossover take place, and also not only seeing the one signal take place, but seeing all the other filters or all the other signals that are possibly involved in the system take place. A machine is going to be better identifying that. And not only that, they're going to be better and faster at entering the corresponding order. So again, as you might imagine, a machine will typically beat a human in the speed of identifying a trading signal or signals and the entry of the corresponding order. Okay, moving on. Advantages of the Forex market with regard to systems trading. Forex market is a true 24-hour marketplace 5 days a week, allowing for uninterrupted trading. Market is massively liquid. Under normal conditions, there is no problem entering or exiting a trade. There are no commissions, only spreads. There is no fixed lot size, allowing a great deal of flexibility in your position sizing. I'm going to scroll this down a little bit. So we're looking at advantages of the Forex market. The scope of the market is so vast that it is impossible for any entity to manipulate it for an extended period. So where in some markets you might have a hedge fund pushing a stock around, manipulating a stock, no one's really going to be able to manipulate or push around the euro, for example. It's just the market's just too huge. You can't imagine how volume of trading that it would take to move the euro for an extended period. Forex dealers typically offer a great deal of leverage, sometimes as high as 400 to 1. Bear in mind this can work against you if misused, and is probably the single factor contributing most to the failure of novice FX traders. Short selling. Unlike the equity market, there's no restriction on short selling. And finally, the market is highly volatile, creating many trading opportunities night and day. Sure, boy, keep the articles here. And it's what we're looking at right here. And you can see there's a link to the article also from our homepage here. So you scroll down. There's the article. Okay, so now we're going to look at the components of a trading system and just take a look at some of the elements involved, basic elements involved in a trading system. In developing a trading system, the following basic components need to be considered. Market and time frame. Actually, let me scroll down so we can all see what I'm reading from too. Okay, right here. Market and time frame. Next, you got to consider what the entry is, the trigger that initiates your buyer-sell signal. What is it? Is it a moving average crossover? Is it a MACD crossing the zero line? Something like that is the entry. Stop loss is the next thing you got to consider. The level at which you will cut your losses in the event of a trade going against you. Profit target. The level at which you will exit the trade to take profits. Okay, to give you an idea of what a basic system might consist of, here's an example. Market and time frame, Euro USD, daily. Entry. Buy entry occurs when the 50-day moving average crosses above the 200-day moving average. It's a signal known as the golden cross. Sell entry occurs when the 50-day moving average crosses below the 200-day moving average. That's a crossover known as the death cross. And for example, the stop loss might be set at 200 pips or 50 pips from the entry, and the profit target set at 200 pips from the entry. An oscillator such as RSI, Relative Strength Index, could be used as a filter so that you only enter a long trade when RSI indicates oversold conditions and a short trade when the RSI indicates overbought condition. Conventional wisdom holds that fewer parameters or rules are better in developing trading systems. There we go, Bob. Okay, so let's, for those guys that aren't familiar with this, let's, just going to log into my charting software, and we'll just take a look at how this looks. You know, a basic trading system, how to visualize that. Let me just size this up to make sure it's right for the recording. Get rid of that. Okay, so everyone should be able to see the chart now. Okay, so the first thing that we wanted to consider was the market and time frame. What was that? The market, we were looking at the euro. Okay, the chart's okay. Okay, so there we've got the euro. Really came off pretty good yesterday, didn't it? Time frame, we were looking at the daily. Okay, let's get rid of these EMAs that I had on here. Okay, so the basic trigger for our basic system here was the crossover of the 50-day moving average being the shorter term moving average and a 200-day moving average. And we can see that's way down here. So this is a setup that doesn't happen very often because we're using longer term moving averages. Change the time frame there a little bit. So we haven't actually had a trade signal in the euro in this for a long time. And it doesn't look like we're going to, because we've got a pretty nice uptrend going on in the big picture. We can see these moving averages nice and far apart, which indicates that we're in a pretty strong uptrend. Okay, anyway, now we can see how we put the moving averages up there on the screen. Let's pull up our filter. Remember in our when we went through our interview with Wells Wilder, guy that developed the RSI, he recommended no more than 2 rules to a system. I thought that was pretty remarkable. The conventional wisdom holds, as I said, that fewer rules the better in a system to avoid curve fitting the system. Strat's got a comment. He says there's a cross of the 50 and the 200 in the cable. Well, that's interesting. Let's check that out. Yeah, there is. Look at that. Just make sure everyone can see the screen. So things are actually looking pretty bearish. We have a death cross that took place here in the cable. Let's see what the RSI was telling us at that time. That time the RSI was not actually in overbought territory, so we didn't have confirmation from the RSI there. But being the longer term moving average here, being that these are longer term moving averages, that's a pretty powerful sell signal right here, having the 50 cross below the 200. And sure enough, there was a nice break, as you can see. And it looks like this might be a trend that's a pretty good trend that's beginning to develop here. Okay, so again, we don't want to curve fit your system. You want to have probably no more than 2 parameters, 2 rules, according to Wells Wilder in his interview, which you can also see on, you can see that from our homepage. There's the Wells Wilder interview, the guy that invented RSI, so I think this guy deserves some of our attention. There you can see on our homepage the Wells Wilder interview if you want to refer back to that later. Okay, so we described the system with the 50-day and the 200-day moving average crossovers, and the RSI is a filter. A system like this could be programmed to auto-execute in a trading platform. Alternatively, the system could be semi-automated, whereby you are alerted when the entry trigger occurs and oversee the placement of the trade yourself. So, for example, you could have had that setup programmed into Metatrader. Let's say you were tracking the cable, you were tracking the British pound, and you could have had a text message sent to you when that crossover happened, and initiated your short trade in the British pound. Which would have been a great one. Alerts can be audible through your computer, so you could have heard the alert through your computer as a sound. It could be sent to your email as an email, or even sent as a message to your cell phone, as I said. The semi-automated system clearly carries less risk, with you being there in person to pilot the system. So there's less that can go wrong, if you're there in person to enter the trade. A fully automated system is quite risky in the sense that it should be really rigorously tested both in a simulated and a live environment. It's going to return where we are in the article. Okay, so that's where we are. We've only got 9 minutes left. Now let's take a look at some of the trading platforms that are making automated trading of the Forex market possible. Okay, first of all, Metatrader. This is where we're going to focus a lot of our attention, guys, and I know that we've been through a lot of this material already for the regulars of my sessions. The next sessions, I want to really get our teeth into how to use the Metatrader platform. First sessions will deal with just getting set up and navigating the platform, and then we can get into some more sophisticated things like actually developing the expert advisors and so forth. But let's take a quick overview of what Metatrader is. Metatrader is a Forex trading platform built by a company called MetaQuotes. The Metatrader platform has a built-in programming language called MQL4, MetaQuotes Language 4, that allows the user to create and backtest trading strategies using historical data. MQL4 is used to write expert advisors. You'll hear this word a lot if you're surfing the web, in the Forex forums and so forth. Expert advisors, mechanical trading systems which can be used for both trading alerts and automated trading. Next, another term you're going to hear a lot is custom indicators. These are indicators created either by you or by other Metatrader users in addition to the suite of built-in technical indicators. MQL4 is easy to learn and understand. It is relatively easy to learn these programming languages for these trading platforms. They've made it deliberately easy for the consumer like you and me. Metatrader has a large and active user community online. They really notably have very, very active presence on the internet and very active users discussing strategies and helping each other with programming issues. Another nice thing about Metatrader is that it can be used with a variety of different Forex brokers, and it's free, which is nice too. Solby, that's an interesting question. As far as I know, it's not available. It's just Forex right now, but some of the platforms that we're going to be talking about, both TradeStation and Strategy Runner, do offer automated trading systems, development, backtesting, and execution for futures. And TradeStation does stocks too. Let's talk about TradeStation for a second. Just refresh this. TradeStation has long been a pioneer in trading systems development, backtesting, automation. I think these guys were kind of the big name in the late 90s. They were really first guys out there doing automation of trading systems. TradeStation 8.3 introduced Forex trading into what they're doing with trading systems development. If you go to their website, it says 8.3. We're introducing Forex. So it was relatively recently that they started to working with Forex. 8.3 allows you to design and backtest Forex trading strategy using the easy language technology. Forex trading strategies can be fully automated through their platform. TradeStation also offers automated trading of stocks and futures, and the platform is incorporated with a brokerage firm, TradeStation Securities. So you can use them as a broker too, and they're quite good from what I understand. Finally, Strategy Runner is another innovator in the world of automated trading systems, offering fully automated trading with high-quality execution of trading strategies using a server-based solution. Server-based solution, what does that mean? That means that the trading system resides on the server of the brokers. So, for example, if your computer breaks down or you lose your internet connection, your system will keep trading because it's trading off the server at the broker's office, which is kind of nice. So you don't have to worry about something going wrong with your computer. Strategy Runner hosts and executes your strategies for you on secure servers located in the broker's facilities, ensuring that technical problems on your computer will not interrupt trading. Strategy Runner, you can adjust or manually override your strategies at any time. Another interesting thing that Strategy Runner does is it has kind of a store for trading strategies called the Strategy Exchange, which is it's a marketplace for automated trading strategies developed by industry professionals. And so what you can do is individual investors can go on there and select and build a whole portfolio of systems and then auto-execute them via Strategy Runner. Okay, so to wrap it up, my conclusion says that both the Forex market and trading systems are here to stay and have a long evolution ahead. I think we're really... Strat, I'll get to your question in just a sec. Both the Forex market and trading system are here to stay and have a long evolution ahead. I think we're just at the beginning of what's going on here in terms of our evolution. The future outlook is bright for the speculator. Increased FX market regulation, we can see this going on right now. Tighter spreads are getting tighter, better execution. And in the world of trading systems, we're going to see constant innovation and improvement in trading systems technology. Okay, thanks for bearing with me, guys. Strat, I will get to your question now. Does relative strength work on weekly charts? Sure, I would say, yeah, absolutely. All of these indicators work on the longer term charts. Also, you're going to get fewer signals, but the signals that you get are going to be more reliable. That's pretty much the rule of thumb with technical indicators. You're welcome. So again, thank you all for coming today. And for those of you that have been to my previous presentations, thanks for perhaps hearing some of the same things I've said before. I wanted to go over this again one more time because I want to, as I said, enter into this series of webinars on trading systems and the automated trading systems platforms. Thanks, Wen. So next time we will get our teeth into some more practical applications and look at the Metatrader platform. So look out for that next Tuesday. Peter and Wen, thanks for coming. Always a pleasure to see you guys. And I better sign out because I know we got a big lineup of speakers today. Theodore, were you in Egypt? Thanks. So I better move on. And Theodore is the Egyptian. Great. Better move on. Look forward to seeing you. Thanks, CBJ. And I appreciate your support as always. You're a champ. Let's get our teeth into some practical application next Tuesday. Exactly. Yeah, you want to have some help from these systems. Don't have to be sweating it in front of the computer all the time. So, all right, I better get out of the way and move on and make room for the next speaker. So, all of you have a great week and weekend, and see you Tuesday. Good trading. Sign.